This is the public count. This is what we're looking at here. We're going to talk about each of these stocks, which ones I'm thinking about buying, selling, holding, all that good stuff, right? Meta's here off the top. That's a huge weighting in the portfolio, obviously. 34% of the portfolio, $967,000. $766,000 of that $967,000 is just gains on the stock, right? Remember when I told you the compounding starts to get fun, right? Tesla's a pretty shocking one. It's the current value of my Tesla shares, and by the way, it's a little under 12% of the portfolio. $332,000 is what my shares are worth. $319,000 of that is gains. Like, let that sink in for a moment. Like, woo-wee, this could be fun. Palantir, that's a little less than 12% of the portfolio, about 11.5%, right? $330,000 of current value, $289,000 of that $330,000 is gains. PayPal, $268,000 position, a little less than 10% of the portfolio, $74,000 of that is gains. Amazon, $228,000 position, 8% of the portfolio, $104,000 of that gains. Elf on a Shelf, $127,000 position, about 4.5% of the portfolio, and $119,000 of that $127,000 is gains on that stock. Cheesecake's up to a $30,000 gainer. That's a little less than a 4% position, $110,000. So I have a good amount invest in cake. I like it. I like it a lot where I'm positioned there. Revolve, $99,000 of current value. $65,000 of that is just gains, right? 3.5%. Nike, down $10,000. That's $96,000 position, 3.4% of the portfolio. Estee Lauder, we're slightly positive on that one. It's positive $843, $60,000 position here, 2%. I'm looking forward to speaking about that one. SoFi up $33,000, up 127% on a $59,000 current value now, 2% of the portfolio. Celsius, right around break even, 2% of the portfolio, $56,000 position. Fubo, down $15,000, down 33%, about $30,000 of the portfolio, 1% weighting. Planet is a 1% weighting, down 69%, down $67,000. Monster, up $1,000, up 4%, 4.5%. $24,000 position, a little less than a 1% of the portfolio. And then Toll Brother put options, about a 0.5% of the portfolio, down about 5.5K there. Just on these shares here, $1.7 million plus in the plus. And that does not include dividends. So let's get into these stocks. So I really want to focus in on these top positions here at first, okay? Because there's some huge differences here. Because you could look at my portfolio, you know, and obviously the top is Meta, 34%, and then Tesla a little less than 12%, and Palantir at about 11.5%, right? Now, the thing you got to understand about those positions is, one, they've went up so much. That's how those stocks became such ridiculously huge positions, right? It's not like I put crazy money into those stocks. It's just they went up a crazy amount. Palantir's up $289,000. We're up $319,000 in Meta, and $766,000 were up on Meta, right? Or Tesla was at $319,000. So when you're up that much on those stocks, that's how they became such big weightings. But what's interesting is two of those stocks, you can make an argument that are very overvalued, right? If you were just looking at forward P, 2-year forward P, trailing 12-month PE, right? And those are Palantir and those are Tesla. And it's very clear when you look at Meta, right? It's very clear Meta's got the most attractive risk-reward profile out of those three stocks, right? Because it trades at a forward P of 22 with double-digit top-line growth and double-digit bottom-line growth, right? And they have an insanely diversified business because they own Facebook, they own Instagram, they own WhatsApp, they own Oculus, they own Threads, they own the Llama model, which is just taking over in regards to AI. And they're actually one of the very few companies that's actually benefiting massively from AI outside of maybe Palantir and NVIDIA, right? So Meta's the best risk-reward profile in terms of like, what are the chances you lose money in Meta over the next 3 years? Extremely low. What are the chances you double your money in Meta over the next 3 years? Extremely high. Palantir and Tesla represent bigger upside, right? Palantir, the growth rates continue to accelerate from this company. And look at the trailing 12-month earnings per share growth, the current year expected earnings per share growth. It's off the charts. It's insane. I mean, we're talking about 200% plus numbers, right? Current year expected revenue growth, 27%, but keep in mind they just did a 30% number, and analysts are at about 25% for next year. Palantir could come in with a 30% plus number next year, right? And Palantir has been consistently upping their revenue growth rates. It keeps accelerating. At some point that's going to break, but we don't know when. And that's the upside risk if you want to think about Palantir. What if this company just keeps accelerating these growth rates? In next quarter's 33% revenue growth, then 35% revenue growth, then 37% revenue growth, then 40+% revenue growth, right? Like maybe we're not at the top. A lot of people want to call a top on revenue growth. Maybe we're not at a top yet. Maybe we still got, a bit to go here. And if this one reaches a 40% or 50% type revenue growth number, people are going to lose their mind. Like next thing you know, Palantir would be $100 if that happens. But that's a big question. So this is why I look at a stock like Palantir, and it definitely comes with a lot bigger risk than a Meta. But Meta is likely growing revenues 15 to 19% next year, in my personal opinion, right? Analysts are kind of in the 16, 17% range. I'm more toward the 18, 19% range in terms of what Meta is going to grow. I don't think it's really a debate. It's not like Meta is going to magically grow 30% plus next year. I would love that if they did, because holy smokes, like Meta's going to 1,200 quick if that happens. But that's likely not happening, right? Meta's likely going to be, probably in my numbers, 18, 19% revenue growth. Palantir is a complete wild card. We don't know, right? So that's why that one's trading so insanely rich, because the numbers are just off the charts and they just keep putting up better and better growth. Tesla has a little bit of a different story than Palantir, because Tesla, we're likely going to see finally good numbers coming from this company in 2025, 2026, which the numbers have been pretty depressing from Tesla in 2023, 2024. You're likely going to see revenue growth coming in the stock again, double-digit revenue growth, which that revenue growth has been sleepy at best for the last good bit of time here. You're likely going to see margins expand rapidly. I'm talking gross margins and net margins because of full self-driving software and more subscription plans there. Additionally, Cybertruck is going to go from basically a headwind for the company to a tailwind for the company in regards to profits. And, with a better consumer backdrop, I think that could be very, very good for Tesla overall. So Tesla's going to likely see, I think, major gross margin and net margin expansion in 2025. Now, additionally, there's a robotaxi opportunity, which is just a complete wild card. We don't know, we don't know when that starts to come to fruition, but whenever it does, it's going to be a very exciting day and a very exciting time. And then always Tesla has so much in the pipeline that the stock's always going to trade very rich. Like Tesla's always going to trade at pretty much a forward P of 50 plus. As long as Elon Musk is leading the company and they have this sort of DNA at that company, it's always going to trade extremely rich compared to the market in general, just because people are always so excited about what Tesla has coming down the pipeline. And to be quite frank, you've got to respect it. You got to respect it. What are you going to say? They've done everything people said they couldn't. People said, when I was buying this stock many years ago, right? People said this was going to be a bankrupt company. Let's not forget that. People were calling $5 price target. They were saying it's going to zero. They were saying it's not going to make it, right? They were saying they can never produce a lot of cars. Now the company's going to do, $100 billion plus in revenue in a year? It's crazy. People said they could never figure out full self-driving. Well, dang, they've come a long way, and they're almost there now at this point in time, right? They're pretty freaking close. We're in that last inning. Now we're in the 9th inning of this game. And once that's solved, that's solved. And, full go all over the U.S. So they've said this company couldn't do this, they couldn't do that, they couldn't do this, they couldn't do that. And every time people try to talk down Tesla, they can't do this, they can't accomplish, they get it done. And so can you imagine what Tesla pulls off over this next 3 years, 5 years, 7 years, 10 years? You're ready to have your flapjacks flipped in regards to that one, right? So yeah, that's my views here. Palantir's a hold for now. If the stock goes 70, 75, I might consider selling 1,000 shares of Palantir and taking my position sizing down to 4,000 shares. If it goes over 75 this year, I mean, here before the end of 2024, I could sell 2,000 shares of Palantir because the risk reward profile just will not be nearly as attractive. So we'll see what happens in regards to that one. I kind of hope it doesn't go up because I would love to just hold the current shares I have here, right? And continue to see those growth rates come in and then kind of make some adjustments if I want to continue to just hold or buy or sell, right? Tesla, I've already sold what I wanted to sell in regards to Tesla. So now these 1,000 shares are just holds for the long term in regards to Tesla. I already de-risked in regards to that one. So yeah, my 1,000 shares now, I'm just riding with that longer term. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Dan Ives, Tesla's the most undervalued AI name in the market.
Ives, Dan, it's great to have you here on set.
Great to be here.
There's never a dearth of information in the tech sector for us to talk about, but I do want to start with the Microsoft piece of this, because we always talk about whether the market feels like this is 1999, poised for 2000, and here we are talking about Microsoft up for regulatory review. That sure feels like 90.
Yeah, but it's such a silly comparison. I mean, you're talking about the best companies in the world: Microsoft, Nvidia, Apple, Meta. Like everybody in the world uses these products. Like everybody, right? When we're talking about these top tier companies, and so to compare them to the tech days when who was even using a lot of these products back then? Like if you even had a computer in 1999, like you were really forward looking, like, whoa, look at you, man. You got a computer? Oh my gosh, you got AOL? That's like big time. Are you kidding me? Like that's the days we're comparing to. It's a bad comparison. It's a bad comparison. And also you look at big tech valuations and you can make an argument that either these companies are fairly valued or undervalued. You can't make an argument that those companies are in a bubble. If they were all trading at 55 forward Ps, I would feel very different. And they all had 5 or 10% revenue growth. But given the revenue growth, the earnings per share growth, and the Ps these stocks are trading at, you can't really debate. Like these are super richly valued stocks, right? I spoke about a little bit of that in these two videos here recently. This one, why I'm not selling a single share. And then this video on the main channel, I don't know if you guys follow me on the main channel, Financial Education. I'll buy this stock and sell the stock. By the way, this video, really important. I explained the infinite money loop that essentially the 1% employs. So if you never got to watch that video, definitely check that out in the next day or two. If you see that thumbnail, it's definitely worth your watch. A lot of people loved that part.
2000.
Look, if Khan was staying, that would be a different situation. I think
True.
the view of us and the view of many on the street is that Khan's days, the FTC, are numbered. I think you ultimately get a more, we'll call it even-keeled, business-friendly sort of chair of the FTC in there. And we just think bark's worse than the bite when it comes to Microsoft. Microsoft went through that battle in the 90s versus, DOJ and U.S. government ultimately won it. And look, you're definitely seeing the strong get stronger in terms of big tech. And as much as this is really going to be a UFC battle that continues to really play out between big tech, but I just think when it's all said and done, the noise is going to be more than the reality, not just from Microsoft, but I think even when it comes to Google and others.
How much is going to hinge, though, on the Trump administration, the picks for DOJ, antitrust, and FTC? Because there are a number of names floated for each of those positions, and not all of them are, I would say, rah, let tech go wild. Some of them are much more focused on antitrust and I'll call it maybe potentially a similar approach to what we've seen in the last couple of years.
Yeah, I think on DOJ, you definitely get someone probably in between. I mean, look, Vance is obviously anti-tech, so you're going to definitely have someone that's a little on the aggressive side toward tech. But I think the big issue is on FTC. Because Khan, for big tech, it has been a nightmare in terms of Khan at the FTC. Her being gone, which we believe is ultimately will be the next step when it comes to January, that's bullish for tech. I think, look, a big reason when Trump came in, when you think about Khan out at the FTC, that's bullish for big tech. I think less regulations. And then who's at the table right next to Trump? It's Musk. And I think that's going to also play a big role unofficially in terms of some of these picks and where this all goes. But I continue to think in terms of this AI revolution, it is 10 p.m. at that party that goes to 4 a.m. And I don't see any of these appointments that's changing that party or that party closes early. I think we have a tech bull market that goes well into 2025, 2026. And I think a lot of this sort of noise that we see here are more opportunities to own these names rather than time to get nervous.
Do you buy Tesla here then, given the rally we've seen, the torrid rally we've seen this month?
I think get the popcorn out. because I believe Tesla's a stock that could ultimately double from here over the next 18 months. It's been obviously a parabolic move, but as me and you talk about autonomous itself, we think is worth $1 trillion. So when you think today, I view Tesla as the most undervalued AI name in the market. It is not ridiculous. It might almost be conservative to think, could this be a $500-600 stock? As the autonomous ultimately plays out, I think the margin story is definitely stabilized here. And I think investors, look, the haters continue to hate. They hate it at $50, they'll hate it here. But I think we sit here, and this will be sort of a golden star, in terms of when you look at the market in 2025, in terms of what we see for Tesla, I believe $2 trillion on the horizon.
Yeah, so obviously Tesla is one of my biggest positions, and it's my best performing stock in the public count, right? Up like 2,500% or whatever crazy amount. So here's where I'll push back against Dan Ives there, right? Because I don't just want to be straight on his side. I always like to kind of go contrary and try to push back, right? So here's where I'd push back against Dan Ives here. We don't know. We don't really have a clue about what full self-driving is going to be worth. We don't know how much profit Tesla's going to make. We don't know if they're even going to make any profit on it for the first several years. Is a potential they actually lose money when they start the robotaxi network for several years. Everybody's banking like right away they're going to be making so much money. Might not. It could even take Tesla into, if we want to go really bear case, I'll take you really bear case. It could cause Tesla's entire company to lose money. Something that at least needs to be considered. Might not play out, but I like to try to, because I hate when everybody's just like FOMO and 2 trillion, 3 trillion, 10 trillion, 100 trillion, right? And they're not really like factoring these other things in. And the fact that many times in a business model like this, you need to get to scale. It wasn't like Uber just was making all this money. No, like Uber took 10 plus years to really start making any money there. Lyft still struggles with making money. You have to get to major scale before you start making real substantial money, right? And even if you're profitable on a per ride basis, you got to factor in all the fixed expenses and everything that goes along with that. So it could take Tesla, and there's going to be lawsuits, there's going to be legal problems, there's going to be a bunch of crap. Okay, that's all I'm going to say about that. And so it could take Tesla a while to get the robotaxi network to actual profitability. Everybody's just assuming right off the gate they're just going to be making all this money, and I'm like, slow down, slow down. We might be losing money for a few years when this starts to build out. And I don't think many people have even factored that in. And then we can talk about starting to make a lot of money. But we don't know, like, what does this mean for Tesla? Like, maybe Tesla makes an extra $5 billion of net income a year because of the robotaxi fleet. Maybe they make an extra $50 billion a year from the robotaxi fleet. We don't know anywhere those numbers are, and we don't know when they're going to hit those numbers because they haven't even started selling a product yet. You have to wait till a company gets a product or service in the market before you can really start valuing it properly. Tesla got really easy for me to value it, which is why I'm up 2,500% or whatever. It got very easy for me to value it properly back in 2018, 2019. I was able to look at the company. They had products in the market. I was able to run numbers on, I think they're going to sell this many Model 3s. Here's what their ASPs are right now. Here's what I think they're going to be in the future. Here's their margins right now. Here's what I think they're going to be in the future. Here's their net income right now. Here's what I think. Because they already had products in the market, so I was already able to gauge that, right? We got to wait to see after a couple years, 2 or 3 years of robotaxi fleet, then we can start to be able to actually run some numbers here. But anything else is that dartboard right over there. Let's throw darts at a dartboard. I think they could make $1 trillion off this, $5 off this. We're just throwing darts at a dartboard. You have no clue yet, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Next one up here, this gentleman buying Meta.
The committee, let's bring in Kevin Simpson. He joins us now. He just bought more Meta. Speaking of that stock, it's a new record high today. We'll say it yet again. Why'd you do that?
I think for all the reasons that you've discussed, there's tremendous momentum behind these trades, and there's valuation here. Like, this is a stock that we don't think is overvalued by any means. You look at the forward PE of 25 and you think any type of double-digit earnings next year are going to be accretive to the bottom line.
And it will be there.
They are so focused on shareholder value. The initiation of the dividend, Scott, made this a really unique trade for us yesterday, because not only did we add it to our new growth strategy in the QDevo, but we also bought it in our flagship dividend strategy. They're buying back shares, $41 billion committed to shareholder buyback. They reduced the float by 10% over the past 3 years. This is the first time, and who knows how long it will be again, where we're buying a stock both in a growth strategy and a dividend strategy. But I think it speaks a lot to Meta, how they check off so many boxes. The advertisers now have broached over 10 million. The daily users, the monthly users are increasing year over year by 7%. And we also look at this as a true hardware play. The glasses, the MetaQuest, the Ray-Bans, and the new Orion someday down the road are legitimate products that are actually competing with Apple products. And we're really excited about this stock, not as a trade, but as a true company that's continuing to mature over the next 3 to 5 years.
You feel like...
Yeah, and there's a reason. There's a reason it's the biggest stock in my portfolio, right, in the public account. There's a reason. He makes a good point, actually, there about the hardware business, which kind of gets cast off because it's such a small business relative to their advertising side of their business, which is a giant, right? So a lot of people don't really talk about the advertising business much. Also, it doesn't get a lot of respect from Wall Street because it's not as margin accretive as certainly like the advertising business is, right? But the more I look at it, the mantle's out there. In sports, in music, in business, there's always there's certain time periods when the throne is kind of opening up, right? And I feel like Apple had the throne around hardware for really the past 20 years. 20 years they had the throne. And thank you to Steve Jobs. That's who made that throne, right? And Apple's really had it. This is the first time that I really look at the next decade as kind of the throne's opening up and who's going to grab it. And I don't know who's going to grab it right now. Maybe it's Apple, they grab it back, but I think they've given it up now with how slow they've kind of moved over this past number of years. So it's maybe Apple gets it back, maybe they don't. Maybe Meta grabs it over this next decade. Maybe Google grabs it. I don't know. Maybe it's some company we're not even thinking about, but somebody's going to grab that throne. And then they're going to have it for the next 20 years. And the more I look at it, the more I'm like, damn, could Meta grab the next generation in regards to hardware business? So then they're a hardware play and software play? Jeez. So I don't know, something that should be considered.
We're too quick, Kevin, to write off tech, only in the sense of not writing it off totally, not suggesting you sell the stocks, but saying that, well, there's no way that they're going to continue outperformance. I'm not sitting here suggesting that that tech is, the Nasdaq's going to do another 30% year. But if you just look at where the puck continues to go, and the rink, if you will, continues to get longer. Altman with Andrew today at Dealbook. I think Pachai is later. I mean, these are the companies where the activity is. That's not going to change. Are the growth rates going to be as dramatic as they were this year in terms of their revenue growth? Maybe not, but they're still going to outsize everybody else in the market in terms of what they're doing.
I mean, you said it perfectly. People will always pay up for innovation, and that's why you have to have growth exposure. And I say this as a traditionally value-oriented dividend manager, sort of staying in the slow lane for the most part. But even within our flagship strategy, we allocate 25% to technology because we know there, and also with financials, I think moving forward, that's where the growth is going to be coming from. So will it be as concentrated and isolated in 2025 as it was in 2023? I certainly don't think so. I think the breadth and the broadening story is real. But to ignore technology and to think that you can time it, I think is a fool's errand. And I'll say it once and I'll say it again. You will always pay up for innovation, and that's where you want to be.
Yeah, Kev, thank you. We'll talk to you soon.
Yeah, Meta is just the ultimate stock. And the reason it's ultimate stock is it attracts growth investors because they have double-digit top line, double-digit bottom line growth, right? So a growth investor looks at that. Obviously, what they're doing with the Llama model, what they're doing in AR and VR, and how they're pushing technology, it's very attractive to growth investors. Additionally, if you're a value investor, you're looking at it and you're like, wow, forward P of 24, and it's probably actually lower than that in reality, right? That attracts value investors, especially given the growth rates, right? So anybody that knows how to value a company could look at Meta and say, at 600, it's a deal. Like, it's a deal, right? Additionally, it attracts a dividend crowd now because they pay a dividend and they have a lot of room because their payout ratio is so low. They have so much room to up that dividend over the next several years. So growth investors can buy it, value investors can buy it, and dividend investors, it's the ultimate stock, man. And that's why I just continue to hold that one tight because it is beauty. And at this time next year, what is Meta stock at? I wouldn't be surprised at all if Meta stock's between $900 and $1,000 at this time next year. We'll see. Big short trader Danny Moses on why he's no longer shorting Tesla.
Breather today shares down 1.5% after new data showed deliveries from its Shanghai factory fell for the second month in a row. Yet our guest trader tonight, Danny Moses, who's been short Tesla at various times since 2016, isn't betting against it right now. And for the viewer, you're constantly trading, so keep us updated on where you are.
Listen, I first got into the trade after the Solar City deal was done in kind of late 2016 into 2017, thinking that, wow, it was an awful deal. I'm going to get into the stock now short, off and on for the last few years. The first quarter this year when they reported.
Who was the CEO of Solar City at the time?
His cousin.
Yeah. Okay.
Exactly. We won't go to. He won that court case also.
Okay.
Right. So fast forward to the first quarter this year. It had just started to trade on fundamentals for the first time in a long time. It was hanging around $140, $150, right? So you felt like, okay, the quarter was bad, right? What happened? Promise of autonomous day in August, which ended up getting pushed out to October. Flies to China to get some regulatory relief on certain things. And lo and behold, attaches himself to Trump to make all the other stuff go away. When the story moves from non-fundamental to technical and those nature, that's when I leave a story. And we talk about it on the podcast a lot, giving updates there. But to people that are listening now, it's very difficult, certainly to short a name that is not trading on fundamentals. It's also hard to go long a name when it's all on promises. And I'll say this about Musk. He's promised shareholders things in the past that never came to fruition, was given the benefit of the doubt. He's now talking about cutting $2 trillion, from the U.S. budget, being able to basically improve the budget. And you're not going to be able to do that. So it's one thing to mess with shareholders. It's another, in my opinion, to mess with the American citizen. So we'll see. But it feels like it's moving from the corporate world, right, into the
There's a little soapbox action there.
Man. Yeah. Sorry, I had to go there a little bit just to round that out.
Well, I mean, the question is, does Elon Musk want to take away a lot of the safety net services of people who can't even afford Teslas? You know what I mean? I just think this is an uncharted territory where we are right now. It's one thing to take Dick Cheney, who is the CEO of Halliburton, and put him in that sort of seat. And, it's a very transparent sort of thing. What's going on with this Doge is going to be it's not going to be particularly transparent.
This is interesting because it does go back to a trade because you think about who this alienates in terms of Tesla buyers, right? And so for everybody who loves where Elon Musk stands, there's probably somebody else who doesn't. It's on the opposite side.
It's, that might be true for like a Coca-Cola, or we talk about brands that have alienated. I'm not certain that holds water in terms of Tesla and their base. Maybe I'm 100% wrong. And quite frankly, I don't even know if it's about auto sales anymore anyway. So I get what you're saying, but I don't think that moves the needle.
Think about this. Other than this comp package thing that happened yesterday, the only court case that Musk really ever lost was that he was forced to buy Twitter, right? What happened when he bought Twitter? Only good things happened for him because he used it as a platform to spread whatever kind of information to get what he wanted. And every single investigation that might have been going on is now gone. But to Dan's point, you should be concerned as a U.S. consumer. If you get approved for FSD when it's still supervisory, it's a danger. And that's not a Tesla comment. That's just in general. So that's the stuff I'm watching for now. It has nothing to do with the Tesla stock.
Well, again, we know there are industries and the auto sector. The irony here is that actually the big three, or maybe the big two now, don't necessarily love what should be support of Detroit. And again, I know it sounds crazy, but removing EV subsidies and making it more expensive to build an EV car is not good news for GM, who's not given any credit for their ICE business. So GM shareholder, I actually think some of this is sentiment that will just work its way through. But, and look at the steel sector today. I mean, there's all these conversations about keep it in America, build it in America, no foreign partners for America. Not great always.
Hey, really quickly, I know Mel wants to move here. They also want to cut the CFPB. So we're talking about autos. We're talking about this sort of thing. There's a lot of implications if you cut that. That is meant to protect consumers from financial, fraud or whatever.
Exactly.
So in regards to Tesla and betting against that stock, I've done it in the past and I've made some pretty good money doing that, right? But with that being said, you've got to be very perfect with your timing. I mean, very perfect. If you get timing off by even a few months, it could be the whole difference in just losing a fortune trying to bet against that stock. So yeah, and if you do, like, shorting's dangerous, usually it just makes sense to do it with the small position and put options. But yeah, it's a tough one to bet against, and there'll be a time again to bet against Tesla, but it's just not really something that makes sense right now, at least in my opinion. Okay,